What's going on, guys? It's GBP baby. Welcome to another video. This one is going to be short and sweet as I have things to do. However, I'll be back tomorrow with the standard videos. But yeah, we're just going to do a quick weekly review. I'm sure that Friday caught everybody off guard last week with non-farm payroll. You can see that we had a large expansion to the downside, taking out swing lows. And yeah, in the new week, I'm expecting a continuation to the downside. So with regards to targets, we can look at south side PD arrays, such as this fair value gap residing here. We're going to start with DXY, that I can see price wanted to reach to. Now, one thing to remember is when we're looking at the weekly, we want to make sure that we understand whether we're expecting a bullish or bearish week within the next week. I'm expecting continuation to the downside, so I'm expecting a bearish week, which means that on Monday and or Tuesday, I'd want to see the high of the week get made, and then the rest of the week deliver Thursday, Friday, and Wednesday. So yeah, you can see we closed below this swing low. I'll show you now. Below this swing low, the fact that we closed below this is showing a lot of bearishness, and that means we have this swing low and this swing low to reach for. We can go down to the daily, and in terms of buy side for price to reach for, I'd like to think that it could find resistance at this level now. So let's say we do retrace higher to create the high of the week. I'd want to see this previous swing low, which we've now closed below, act as resistance. You'll see that we also closed below this daily fair value gap here. And the fact that we traded through it on the downside again, I want to see price respect this as a bearish PD array now. So let's just mark that out in red. And this is what you call an inversion fair value gap. So I'm going to type IFVG. And that means when price does trade back into this to potentially create the high of the week, I'd want to see it at a resistance and allow for more selling to occur and for us to run into the south sides residing here. And again, that weekly fair value gap that we have here. Let's go down to the 4 hour. You'll see our price aggressively traded lower during non-farm payroll. Took out the low, of course. Again, there's that daily inversion fair value gap. Let me just write that in. And yeah, I wouldn't be surprised if Monday saw us create the high of the week. If Monday does create the high of the week, that shows a lot of bearishness because it shows that we're in a rush to get to a certain level. So I wouldn't be surprised if Monday did manage to create the high of the week and then we saw a turnaround and again, continuation to the downside, rushing into that weekly fair value gap and imbalance down here. There's obviously sell stops resting below this low, so we can write out sell side liquidity there. And then obviously this low is here as well, which starts the weekly fair value gap. So overall, I'm bearish, understandably, and mostly so because we closed below the swing low. There's a very big difference between simply wicking below swing lows and closing below swing lows. And the fact that Friday we saw an aggressive close below the swing low hints to lower prices. Let's go to GBP. I do already have my markings out on here. It's very similar to dollar, obviously inverted. So we have this swing high, which is also a rejection block, and a previous swing high. Why is it rejection block? Because we can see that when this wick traded up into it, we had a rejection away from it. And on the daily, you can see that price here on the Thursday, right before this swing high was created, right after this swing high was created, when price wicks into another wick like this, what we're looking at here, so you can see we traded into it, and what happened, we had a large rejection away from it. So this isn't a rejection block, but the fact that we traded through on the upside means that it should act as a rejection block, just in the reverse. So if price does manage to reach down into that, we want to see it provide support. We've also traded through this daily fair value gap that I have marked out in black, so I want to see again support shown in this. I can mark out the 50% level of that, like so. And yeah, price is allowed to trade through it. However, I want to see daily candles respect the 50% level. So yes, I'm allowing for wicks and trading through it. However, overall on the daily, I want to see us continue to respect that 50% level for us to push higher and trade into the buy side liquidity resting above this swing high. And I'll just show you that on the weekly right now. There's a weekly fair value gap here in orange. Buy side liquidity above the swing high, starting that weekly fair value gap. And then on the daily, you can see we have the rejection block, which we need to get through as well. So I wouldn't be surprised if we traded higher, hit that rejection block, created some kind of consolidation, came down, took out some lows, and then moved higher. Now that probably doesn't make so much sense, so I'm going to quickly draw that out with a, with a path, just to show you what I mean. So I wouldn't be surprised if we traded higher, came lower to that 50% level, and then ran for the buy side. So that's what I want to see happen in the new week. Let's go to Euro. Similar price action, to be honest. You can see I'm looking at the 50% level of this wick and the previous week's high as well, very similar. So we can look at the high of that as a reach for liquidity, and then yeah, 50% of this wick, I want to see if we can retrace down into that, and then I'd want to see us reach for the buy side, lining up here, and eventually into this wick's 50% level, which will be consequent encroachment. So let's just quickly mark that out now. And the reason I'm marking out consequent encroachments and not necessarily a fair value gap is because there's not actually a fair value gap directly available for us to trade to. So that's when we look at the wicks as an indicator as to where price wants to go to. So I've marked out the 50% level there. I'll just make it dashed so we know that it's consequent encroachment. We've got buy side liquidity above this swing high, so I'll just get that here. Drop down to the 4 hour, and you can see again, I'd like to see us retrace back down to this swing high, find support at this level. Yes, it can trade below this low, but overall I want to find support at this level, and then I'd like to think that we can continue to expand higher, running into the buy side liquidity where we also have an imbalance, and potentially into that consequent encroachment off that weekly wick I just marked out. Very simple, guys. And yeah, that's going to be everything. Monday is going to be very volatile and exciting, purely because we had non-farm payroll on the Friday, so that's something to take into consideration. That's going to be everything, and I'll catch you in the next one. Peace.